All right, civil war at the Fed? Maybe. Anyway, stocks went up today, celebrating Mondami's victory. Ha, ha, ha. Joining us now, John Carney, great financial journalist, and we welcome back Taylor Riggs, co-host of The Big Money Show, right here on Fabulous Fox Business. Welcome to both of you. John, I'll start with you because you wrote about this. Some strange bedfellows. Lisa Cook, who's lucky she's not in jail, but she does want to cut interest rates. Maybe I can excuse her for that. No, maybe not. But new divisions at the Fed. What are they going to do in December, and what's the argument about?
So the argument is about whether or not they should look through the tariffs. That if the tariffs pushed up prices a little bit, should the Fed, worry that this is going to trigger greater inflation, which frankly is crazy. It's barely caused any inflation at all. Or should they worry about the labor market? And there are signs of weakness in the labor market. We don't have the jobs numbers anymore. The ADP numbers came out today. They were okay, better than expected, but not right. If you believe them, not great. Manufacturing contracted according to ADP 3,000. The Scott Bessent has said, Treasury Secretary Bessent has said that parts of the economy are in a recession. The Fed should be cutting now. I don't know whether they will, in part because—
What's in a recession? Housing's in a recession.
Housing is in a recession. That is the key place. But there's also signs of weakness elsewhere. Maybe sort of knock-on from the recession. Like the manufacturing has not been doing terrific for the last 6 months.
I just noticed that ISM manufacturing has been pretty lousy. I used to use that as a bellwether, but now a lot of people are telling me the S&P global
because
thing.
We're waiting, and the inclusion of that, and the S&P
it's pretty strong.
Popped back above 50, I believe. So I hear you on that. There's been, look, you can always read different things and pull the data how you want, but I do agree that the S&P, given some of the weighting on that manufacturing index, is something that people have been looking at. For all intents and purposes, the stock market doesn't care, right? They are looking back at earnings, which frankly are crushing it. Now, you could argue that things were priced to perfection. The minute you got all of these big tech earnings that were up 30 to 50% on earnings growth year over year, they're down in postseason 0.4% on average, right? So that doesn't look good, except that yesterday all those concerns are now gone because today we rally again, right? And we're only a couple percent away from a record high. I keep hearing 7,000 on the S&P 500 by year end, 7,700 by this time next year. So what that means is that companies are making money. And you talked last segment for the big, beautiful bill. Maybe some of that is starting to filter back down into corporate profits, which, as you know, helps to drive some of the positive returns in the equity market.
Profits are the mother's milk of stocks. I mean, I read all these Wall Street smart guys, hedge fund guys, and so they're all saying it's a big bubble. Okay, at some point they may be right. But as long as these profits keep coming out, and I follow it or try to read it, I got a couple of smart econs that send me their stuff. Profits look awfully good. But John, on the tariff inflation, which might stop some people at the Fed from easing their rates again. Your own work, I cited you in the riff. Goods, core goods, used cars, trucks, none of that stuff is up more than 1 percentage point year on year, and even that, durable goods. I mean, it's all pretty benign, quiet, compared to Biden, for heaven's sakes.
This is the stuff we were told that was going to get hit the hardest by tariffs. So the prices were supposed to go
nothing happened.
It hasn't. It's actually up less than 2% in all of those categories. There's no tariff inflation going on at all. The Fed is wrong about this. The problem is when they look at this data, they don't admit that they're wrong. They are so convinced by their own models that they just say, oh, it's just hasn't happened yet. It's coming someday. But look, they've been saying that for 9 months. Ever since Donald Trump took office, they've been saying we're going to get tariff inflation. At some point, that story has passed its expiration date. I think it is. They're going to have to get over it. I am worried that Jerome Powell is going to dig his heels in, and we may have to wait till May to get a rate cut because he's going to say no more.
Well,
I will say on the tariff thing, because we were talking about the Supreme Court who was hearing oral arguments today, may I go out on a limb and say the stock market is happy either way, because either way, then there's certainty. So they're either, the Supreme Court says, yes, go through with it, and the stock market is like, great, I have certainty, I can plan. The Supreme Court says no, and the stock market says, great, I have certainty, I have a resolution, I can plan. The market just hates uncertainty. So maybe either direction.
Scott Besson was pretty optimistic about the
Yeah.
outcome. Yeah, we had him on for quite a while talking about that. He was optimistic. I think he liked what he heard from some of the justices. He liked the arguments. I mean, look, the foreign policy argument, I still believe, is going to swing them and let IEPA. They may put a restraint on IEPA, but you can't stop IEPA. I don't know what you were going to say.
Well, one of the things that the attorney for the people suing against the tariff said is maybe you can do it prospectively, meaning they won't cancel the tariffs that have been collected, but say you can't do these tariffs going forward, which would be fine because the Trump administration has a whole stack of statutes that they can use to impose other tariffs. And I don't think the Supreme Court wants to tell the US government, you owe $200 billion in refunds to anybody. So I think if they do, even if they knock this down, again, what the attorney against the tariffs agreed that maybe the way to do it is to cancel it prospectively.
It would be the greatest rebate of all time. $400 billion rebate. How about that?